Maverick traders. Welcome out to your currency midweek for November 16th. Corey here with you as usual. And a quick reminder to make sure that you follow your trading plan. Everything that we go through is intended to be educational in nature and to assess the markets together, right? But everyone manages their own account and their own capital here, and I give my straight up opinion. Sometimes I'm right, sometimes I'm wrong. I kind of talk about the fact that the market will ultimately judge us. Lately, this has been a very interesting year because of the kind of moves that have been making the US dollar with a huge rally higher, the stock market with a big decline. And many of these things really make sense to me. I feel like I've been in sync with the market even the past week or two. We talked about that stocks should rally, that the US dollar should be making this downward decline. I mentioned this a few weeks ago that I just think you can continue to look to short the dollar. Now, that is the big picture perspective, but in the short term you have to be tactical and you have to kind of pick your spots. And so while I think we're in a bear market long term, we'll look at those charts, and I was anticipating more upside in stocks. I do think that the dollar's downside move and the stock market's upside move are at this point stretched. And so what do you do when those positions are stretched? Well, basically, there's probably going to be a correction, a pullback, some sort of consolidation, and that's the next opportunity to really bet against them. So for me, where I've loved the US dollar on the short side, we've really sold off aggressively, and now we're kind of down here. I would anticipate one of two things. You can correct in price, so you could have a pullback, or you could correct over time. You could kind of do this where it's just a low base, right? It could have an upward slant to it, it could have a sideways slant to it, but either way, we're in need of some sort of consolidation slash pullback type of behavior. Assets tend to move in zigzag type of patterns, and so you would anticipate there would be a little bit of a resting period here. I don't want to, where I loved shorting the US dollar over the past couple of weeks, the risk to reward is very different here. Shorting up here made a ton of sense and a great risk to reward. Shorting down here, I think the only way I would kind of agree with that would be if you're really quite short term, like you're just playing for an announcement, maybe a day or so. But I think the next couple of weeks, the next week or so, we should have some sort of correction. So I don't really want to push that trade too hard anymore. Now, on the next pullback and consolidation and so forth, would I look to reassess and quite possibly reshort the dollar? Yes, but we'll come back to that. Crypto has really diverged this year in dramatic fashion, and the dominoes are tipping over. I've long held the belief that most of this stuff in the crypto markets is absolute trash and destined for zero. I do not believe that all these NFTs and tokens and things are actually have true value. I think it's sort of a greater fool theory. People create them and hope that somebody's going to, anyone that buys them hopes that somebody's going to come in and pay a higher price. And as long as you can sell it to somebody later at a higher price, what do you care if it has any real intrinsic value? You say, well, it's just kind of, I just need a greater fool than me to come pay a higher price. And while the music was playing, of course, these were skyrocketing. I mean, you saw some NFTs, which are, some of these NFTs are just a picture of something. And they were selling for millions and millions of dollars. So it got completely ridiculous and out of hand. And many of those have basically plummeted to zero. I mean, you're seeing, the FTX, which is getting all the news, he was worth 30 billion or whatever, 40 billion, and now he's worth zero. That quick, because it's not a true asset. It's just some, thing that kind of created a bubble. And I think when we look back, even regardless of if Bitcoin survives or Ethereum survives and so on, we will look back at this and say, how crazy and out of control did this get? There's a very famous bubble, the tulip bubble, and I thought this was insanity. In the tulip bubble, just that flower back, this was in the 1400s, but that flower was worth more than people's homes. And again, it was just this euphoria where people got caught up in it, and it was like, man, if you had a tulip, how amazing was that? And so everyone would keep paying more and more and more, and people saw others getting rich, and this was hundreds of years ago, but everyone talks about the tulip bubble and how crazy this got. Well, at least when that bubble burst, they still had a pretty flower, right? Here, you're left with nothing, just made up, non-intrinsic value. You don't even get a flower when it's all said and done. So some of that was just insanity. Now, with this decline in the NFT and token market and so forth, precious metals have really started to have some nice upside. And they're also helped by a declining US dollar. So we've got a couple of headwinds where, I would much rather be a buyer. Not that I think gold and silver is something, extraordinary, but I think I would much rather buy into that than many of those tokens and NFTs and things. And if we get a lower trending US dollar, that should help the metal market. But right here, right now, again, I think it's had a nice pop. It should consolidate and such. Economic reports, you can see in the US, the one inflation number we got this week was a good one, meaning it was lower than expectations. The PPI, Producer Price Index, came in at 0.2 month over month versus zero point 0.4 expectations. And that's what you want to see, that downward trend in the month over month numbers. And what happens is kind of like a moving average. When this new month comes in, 13 months ago goes away, right? And so when the next month comes in, then the 12th month goes away. And so we're going to start over time to get rid of some higher inflation numbers and hopefully be inputting some lower inflation numbers. And what that will do is create that drop in the annualized number. But it's probably going to move a little slower than a lot of people want because look, 10 months ago, PPI was way too high. So we've got some time to work through that and really get those annualized numbers down. In the UK, CPI year over year, so this is the full year. If you add up all the months and put them together, 12 of them, 11.1, a much higher inflation number than expectations. And that's where we're at. We're kind of at that peak level of year over year inflation in most countries, but we should be at the tail end of that, meaning these will decline. And I think if you fast forward to next year, we're not going to be looking at these year over year numbers at 11, but it'll still probably be too high. In the UK, it could still be printing a number that's like 5, 6, certainly higher than what central banks want it to be. In Canada, the CPI month over month slightly lower than expected. Again, that's a good thing, but zero point 0.7, I mean, that's still putting in a high number. If you did 0.7 monthly times 12, that annualizes out just right there to 8.4 annualized. So that's not a great number in Canada. Yeah, it's a little lower than what they feared, but that still annualizes out to 8.4 if you printed 12 months at 0.7, right? So still far too high. And because of the way that they measure inflation, it's just going to be sticky. All the things they put in there, like rents and owner equivalent rents and so on, those things are slow to come down. So let's look at the weekly performance. Basically flat, a little bit of a bounce back in crypto, a little bit of a bounce in gold, and a downward move in oil. Now, as we break that down a little closer, I'm going to skip to this one, and then I'm going to go live to the charts here in a minute. But you can see Japan a little weaker so far. Canada certainly weaker. That's been kind of a trend. And Canada, a lot of times these commodity currencies will move together. This is what we've seen. Canada just is moving to the beat of its own drum, and Australia and New Zealand moving to their own. And it's really a divergence of oil, I would say, more than anything else. This is moving much more correlated to oil, where these are more related to, you know, the minerals and mining, gold, silver, you know, just milk prices, things like that, that these are moving to. And so that differentiation really has Canada, the Canadian dollar, moving on its own. And we'll look at that a little bit more closely as well. Year over year, or pardon me, week over week numbers, um, just the same thing, kind of quiet, but Solana just getting absolutely annihilated lately. And it, when you have weeks where you're down 40 and 50%, I mean, you're starting to price in a move towards essentially bankruptcy. I mean, towards zero. So this is what I wanted to get to. Let me move this out a little ways, and we'll look at these in terms of the long term. So here's your 200-day moving average, and here is essentially the downward trend. And we could snap a trend line on there, but it's basically kind of like that, right around where the 200-day moving average is. And that's probably kind of where the rubber meets the road, where this market would probably kind of stall out at. You can see that we've been in a series of lower highs, lower lows, lower highs, lower lows. And we recently made a lower low. We could kind of get up here a little higher, but the anticipation would be that we probably are still within this bear market, right? The longer term trend is moving lower. So we're getting to the top end of the range. Could you go blasting through? Possible. But my guess is that even if it tries to break through here, it'll be a false breakout. So wouldn't shock me. That's kind of how the market's been this year. Wouldn't shock me if it kind of made a little false move here and then came back in, right? And then started to decline. I don't think we're out of the woods by any means. And while I've been bullish in the short term, like we talked about last week, I think as you get up here a little further, we're probably going to stall out. So one of the things that I've been looking for is what I would call an exhaustion finish. Watch for, I mean, you see how explosive this candle was? If we do something similar to that again up here, you know, for whatever reason, maybe we're trying to break out or whatever. If we get a big, one more big push, one more big finish, basically, here's the way I would think of it. You have bulls and bears, right? Who has control? Well, in the short term, the bulls do. So who's feeling the pain? The bears. They're in the pain trade right now in the short term, aren't they? So how does it finish? Well, a lot of times it's max pain, meaning you would, if you get another big bursting move on quote unquote good news, right? Something positive, whatever it is that fuels that next surge, that's where I would want to sell and basically turn more bearish. It's counterintuitive to a lot of newer traders, but I think when this hits max pain, what's going to be happening? Well, they're going to be giving up, throwing in the towel, covering their shorts. It basically is the final buyers, because the way that a bear has to close their position is to do what? They have to buy back their short. They have to buy. And the final buyers here in this rally are the pain trade. You know, the bulls will kind of run out of an appetite for buying. These will have to relieve the pressure and relieve the stress and say, you know, it's called a capitulation. I can't take it anymore. I give up. I throw in the towel. No moss. And from there, we probably start to turn back down. So that's kind of how I would anticipate that this is going to go, right? This is basically kind of that max pain is what I'd be watching for to the upside. And then we'll get a little more bearish on the market. So let's look at a couple other things. I wanted to look at the US dollar chart. This is called the Dixie, the dollar index. And there's been, you could really go back a long period of time and look at this over 20 years. There have been some really key levels on this chart. So if we just kind of look at, you know, some of the key levels, 104, I mean, look at how pivotal that spot is. Down here, I'm going to even drag it a little lower. I'm going to call it 88 or so. Look at how critical that level is, around 88. So in terms of the distance and the levels here, there's something that's kind of interesting that we've talked about before. So 72 or so was the bottom. 72 to 88 is 16 points. 88 was a key level here. 88 to 104 is 16 points. 104 was the bottom here. 16 points higher would be 120. We haven't gone to 120, but it does make you kind of think, if symmetry plays out, that we could go all the way up towards 120 on the dollar index overall. But look at where we're at in the short term, and there's no guarantee you're going to come back to 104, but I suspect that that's where we've been thinking. We called this a big exhaustion top a few weeks ago, and I've tried to kind of pound the table a little bit that my focus is dollar shorts, dollar shorts. I think it just presented a really good risk to reward, and that's been working. I mean, we've come down a lot in the US dollar. The risk to reward to continuing to short it here just isn't quite as favorable, is it? I mean, if we go down a little bit further, we go to 104, that's major support. And from 106 to 104, that's not much. I mean, it's not insignificant. It's a couple hundred pips, but I'm just pointing out that there's not a ton of room to keep going down if you think that support is pretty solid. I suspect that we could get a bounce back here in the near term and maybe kind of come up to 109 or so before we get one more push down. And so that's kind of how I'm looking at it, is look at this little gappy area. If I could short against that, that might present a good opportunity for a few more weeks of downside. And I do think we'll come down and touch 104. In fact, I would even expect us to sink in. When I teach support and resistance, I don't teach it like it's a big cement area. That's not how it is. It's like a big squishy mattress, and you often come and you squish into. So if I was calling this a key level, I'd say it was this area is it, right? It doesn't really matter if it kind of stops right here or right here. It's all the same general area that squish into support, right? And here's resistance, and you can kind of squish up, and it doesn't have to be perfect and to the point. In fact, when you first came up here, what did we say? You remember earlier this year, as we kind of pierced our head above 104, our opinion was, hey, expect it to sink back in first, kind of respond. Even though it was making this kind of false move, we said this is the area of resistance. Don't get sucked in because it's going above it for a day or two. Probably a false move, probably a fake out. Use that next pullback to be a buyer. You'll kind of squish into resistance, back up, and then go. And sure enough, that's exactly what it did. So when we come down to 104, I don't think we'll touch 104 and bounce. I think we'll squish in below 104. And the reason that the markets do that is stop losses and things like that. A lot of traders will put stop losses at obvious areas. And 104 is kind of an obvious zone to say, well, if we go below 104, I'm out. And for me personally, I wouldn't look at it that way. I would kind of look at it as that's the support area. But if you really want to talk about support, it's probably 103. You got to give it a zone. You got to give it a whole big area and say, okay, I'd rather buy it like 103. And some people would say that's nuts. Why are you buying below support? Because I don't think it's below support. I think it's squished into support, right? I think it's in support. And if I buy near 103 on this little fake, little jive below 104, I'm going to have a nice entry, a stop loss below that where I don't risk too much, and I'm playing the squishy end. And basically what I'm playing is all these people that just get stopped out for a couple of days as it first goes below 104, they're getting flushed out of the trade. Essentially, they're, disappointed and disgusted and frustrated, but that's where I want to be a buyer. And it's just too obvious of a spot. You'll probably squish into it, and that's where, I would look to buy in, is closer to 103, frankly, on this index chart. And around 103, you could have a nice stop below that and a pretty good probability of success within. So let's come back into the shorter term chart and kind of think about this. Again, I just don't love the setup here towards shorting. I think the next phase is a bit of a rally. So I I would rather, look at that as an opportunity to kind of play for a bounce. I don't know if we'll get all the way to 109, but it's it's a little bit in no man's land to a certain extent. In a perfect world, you'd be already at 103 or whatever, kind of squished into support, and then it would be just, and then I'd pound the table. Hey, we want to buy this. We want to buy, and so forth. Here, it's kind of, I'd rather be a buyer than a short seller right here, right now, but, look for those opportunities that really make sense. Let's look at a few other charts here. Okay, if we come back in and look at a few of these charts of major currencies, so a few things that kind of stand out to me. Here's the Japanese yen, and this is on a daily time frame. I think what's been transpiring is, in essence, this descending triangle, right? You've got kind of support down here. You've got resistance up here. Now, we recently tested the top end of the range, and we've kind of pulled back a little bit. We're right on top of that 50 MA on the yen chart. This could go either way. I could envision a scenario where we're done going down for a period of time and we come and break out up here, or maybe we've already failed against the top of the range and we're heading back and through support. I think you can look at that and probably make an assessment that the longer term trend has been down, and maybe that's the better probability. But the yen is kind of a tricky one. I've avoided trading it. I've just kind of said for weeks, I just don't know. I mean, for one, I don't know that you want to get messed up in all this back and forth. But number two, there's an added layer of risk with the Bank of Japan that, there's so much nervousness around what they're doing and how they're doing it, such a heavy short position and so on, that it has an added layer of risk of being short. I would prefer, I think, buying the yen in this circumstance. And it's, I don't know if I'll take that position, but that's kind of my outlook. Is I suspect we may get another little fueled rally. I think that would confound the masses. I think there are probably some stop outs here that are destined to happen and such. So I am sort of looking to buy the yen. Let's go to the US dollar chart, and you can kind of see that deterioration that's been happening the past couple of weeks. This is a big sell-off in the US dollar. Really, it's kind of an ABC style correction is in essence what's happening. So the dollar doesn't have to go back to 104. There's at least some possibility that it's kind of at the finishing point and will kind of work its way higher. And I think it is true that the US dollar index could get up to 120, right? The long-term chart, those consistent 18-point moves and so forth, or 16-point moves from 104 up to 120 on the dollar index, that's a lot higher from its current 106 price on the dollar index. So it's possible the dollar has kind of bottomed here. If I was going to short it, I'd feel much better shorting up into this range. So the dollar, I'm just not shorting it anymore, which is a big change for me. from what my outlook was the past couple of weeks. The Swiss franc here, I think, is kind of the level, right? You broke out here, you retested here and held it. What I would anticipate is another push to the upside. Maybe a cup and handle is starting to form, something along those lines. But essentially, US dollar, I'm a little more positive on. Well, I'm a lot more positive on, in that I no longer want to short it. Japanese yen, I'm leaning towards upside, and the Swiss franc, I think, is the more obvious chart. If you want the most obvious chart to buy, these are your three defensive currencies. And this one's set up now, and these two, I think, are both going to work their way higher as well. If you want bang for your buck, you might really get a big burst higher in the yen. If short sellers start to throw in the towel and we start to break out of the top end of that range, it could fuel some real exiting. And so that one could be certainly, a quick spiky type of move. There's always the chance that the Bank of Japan, though, comes out with more stimulus or something that hurts you. So it just has an added layer of risk. And then again, I just think the dollar, it's gone so well to the downside, but I just can't be as aggressively short. So notice right there, I'm just more defensive. I'm just thinking that, in essence, the stock market has kind of made most of its run higher, and the currency markets are rotating as well. So I am more on the risk off camp. That's a change from the past few weeks where I thought we would get some, nice bounces and big rallies in equities on a dollar decline. Just, I don't think you have those tailwinds anymore. And I think the longer term charts now start to reflex their muscles. And the longer term charts are US dollar's been in a huge bull market. The stock market's been in a huge bear market, and it probably starts to come back to that. Let's look at a few others. The euro. Euro is more of a buy than a short, in my opinion. Here's resistance, right? Notice you squish up into resistance and then you fell back. And we've talked about this chart. The cup and handle, we priced it out. Where did you want to be an aggressive buyer of the euro? Right in there is right where the handle should have formed, and it worked like clockwork. We pulled right back to 126. Now we're in the advancing phase, and frankly, I think it's going up and through. So euro and Swiss franc are bullish. Bullish charts should have continued bullish price action. Let's keep moving forward. British pound. Yeah, I'm going to say I don't have a strong opinion. I guess it's a little more bullish than bearish just from a charting standpoint, but I don't think I trust it. So I'm just kind of not doing anything there. Canadian dollar, more bearish. See the breakdown recently. This is really moving in tandem with the US dollar, which has been breaking down. But it's a little different in that, this is given away support here, and we've broken down. You probably get some sort of bounce and whatnot, but it doesn't look that great towards buying or shorting, in my opinion. I feel like it's kind of no man's land. Australian dollar's been rallying, but I'm going risk off. So just as I think the dollar's kind of going to come back and flex its muscle, I am fearful that most of the upside correction in the Australian dollar is done, that you are squishing up into old support, which is new resistance. You've triggered some stop losses here with this move above as people kind of, we're breaking through. No, you're not really breaking through, I don't think. I think you're about to fade off. So I think the Australian dollar is a really good short in the here and now. And last but not least, the Kiwi. Kiwi, I'm going to put it in the same category with the Australian dollar. It's not as obvious of a short. This one's been stronger. But what I think is in play, old support, new resistance, and yeah, we've kind of squished up here, but I think it's coming right back down. So I think Aussie is a more obvious short, but I think Kiwi is going to get pretty ugly here to the downside in the not too distant future as well. In fact, if you even wanted to use these high waves as sort of a stop loss area, it's probably kind of how I'd be looking at this. And I think you're coming right back in. So, as we always say, the market will ultimately judge with P&L, but I feel pretty good about my stance, which is risk off. If you're playing Aussie and Kiwi to the downside, and you're more inclined to play the Swiss franc, the euro, even the Japanese yen, US dollar, if these are more of your upside and these are more of your downside, then that's how I kind of see it. And I fully get that I'm ahead of the charts, meaning if you look at this from the standpoint of, like, do you have to take a position right here, right now? Well, no, but this is my outlook. I call it painting a picture. You got to sort of paint a picture based on experience and so on. You can start to do that. And I have this philosophy, it's much easier to know what is going to happen than exactly when it's going to happen. So here's the what, right? Now I don't know if it started already today. I don't know if it's going to start in 15 minutes. The markets will kind of tell me when it's beginning. What would it look like? Well, frankly, you'll start to see these charts roll over. So the first sign would be a pivot, right? The New Zealand dollar would put in a red candle here and start to break the prior candle's low. So let's say tomorrow it starts to break today's low point. Well, now it's beginning, right? Now we're rolling over. These charts, Aussie and Kiwi, would start to pivot to the downside. What would Swiss franc and euro and these, what would be the sign? Well, they would do the opposite, frankly. They've been kind of coming down. Well, they would start to pivot back up, right? You've been coming down, down, down. You'd start to turn up. You'd start to break above the prior day's high and start to change direction. So I think this is the what's going to happen over the next couple of weeks. And so, again, the market's going to judge this out, but I think we'll come in, a week from now, 2 weeks from now, 3 weeks from now. And what should the charts look like? Well, frankly, the Kiwi should be right down here somewhere, right? The Australian dollar, similar, should have worked its way down and had some form of bigger correction, whereas the other charts would have kind of worked their way higher. So pick your spots, kind of look at those individually. We're talking big picture here, and that's what I feel the most conviction on. Do I feel like it's really set up perfectly on the 15-minute chart? Well, not necessarily. Or the 1 hour chart. You'll have to kind of find your zone, but that's the general trend and the general directions that I would anticipate. Good question. In crypto land, boy, that's a tough one. I said this last week, and basically I said that if you are of the opinion, and I stand by this, if you are of the opinion that Bitcoin is going to be the next big thing, and you want to be an investor, and you're a believer and so forth, if you believe that, now is a time to buy, because there's so much bad news, right? There's so much aggressive selling, panic, um, fear in these markets, et cetera, that it ultimately creates a buying opportunity on all of that negative. And I think that's probably true as a trader. Like, I would expect that these have some bounces. It's not without risk, but it's more of an investment idea than it is even a trading idea. I think as a trader, you've got to use when everything's going wrong, you got to take profits on your shorts. And what I mean by that is when all it's basically everything that you ever hoped for is coming to fruition. Well, how can you expect more out of it? Right? You've got FTX going under. You got people panicked. You got forced liquidations. You got all. If you're not taking some profits when everything is going wrong for crypto and going right for your trade, this is a time to take profits on the shorts. It's counterintuitive, but you don't want to chase. I call it the reactive trader. The reactive trader chases the news. And so, Bitcoin collapses like this and they go, oh, I better hurry and short because look at all these bad things that are happening. No, no, no. That's the worst time to initiate the short because the move's already happened. The move is already done. The news is out there. Everybody now has it. The final sellers are people that are in a bad position and getting pushed over the edge to close their positions and, or force liquidations and so on. You want to be a profit taker when all hell's breaking loose on your short trades, right? That's where you want to take profits, would be on that area. And so by the same token, it's aggressive, but basically you'd want to be a buyer if you were trying to play this short term. I think there should be some sort of bounce or whatnot. Well, at minimum, it's correcting. If nothing else, and if this is all it can do, it's not going anywhere. So trying to short it, you'd have been stopped out or whatever, right? You short on all that bad news. The very next day, it spiked right back up above 18,000 on Bitcoin. So maybe it's only going to consolidate, but a good example of everything bad all happened to Bitcoin at once. That's a profit taking dynamic on your shorts. So Euro CAD, let's take a look at it. So Euro CAD on the weekly chart looks like an inverse head and shoulder. So yeah, I would tend to agree. An inverse head and shoulder is basically, you see all these series of lower highs, right? And you see all these series of lower lows. You see that over and over. And then as you kind of came down here, the first spike up came up towards the same area as that other one. And then this is the dynamic, right? This is what the trader's seeing. Shoulder, head, shoulder. Or essentially, it stopped going down and now it's starting to go up because where did it stall out at? They call this the neckline. That's the neckline, right? And you're starting to break above that. Now, what do I tend to say about trading against long-term charts? If your long-term chart is going this way, I personally don't love buying breakouts. I'd much prefer, I can buy this, but I'd much prefer the buy the dip to buy the rip because you just have, if you start trying to chase upward breakouts, you'll encounter a lot of sellers that'll push it right back down. It's hard to chase momentum because I always use the analogy, this is Michael Jordan trying to jump and he's got all this weight on his shoulders. These are all willing sellers. They call this overhead supply. So can Michael Jordan jump? Yeah, but he can't fly. He can't fly, and he'll probably, come right back down pretty quick. He's got all this weight on top of him. So I don't play breakouts like we talk about. I would wait and play the pullbacks, and then buy the dip and so on. So I think you've got the right idea. Now I'd prefer to buy the dip. Go to your daily chart. Go to your 12-hour. Go to your 4-hour. But look for buy the dip versus trying to buy a ton of momentum to the upside. If this chart were way different and this breakout were happening, but we had come from here, then this is Michael Jordan, and boy, could he fly. If the chart had come up like this, and this is a breakout to new highs, you'd have none of this overhead resistance and this overhead supply. That's where a breakout would be perfect. It's counterintuitive. That's how trading often is. A lot of people think a chart like this has more upside because they see all that it's come down and they say, wow, it's come down so much, it should go up a lot. No, that's not how trading works. It's hard for this to go up because it's come down so much. All of these are dead bodies, just weighing it down, weighing it down. Every time it tries to jump, you got more willing sellers and it falls back. And then it tries to jump, more willing sellers and it falls back. You want things that are breaking out to new highs and don't have all that overhead resistance, and they can fly. So look at what happened in Euro USD. It's going to flip it upside down, but nevertheless, let's just go to Euro USD. Okay, look at what happened here when Euro USD started to break down. Okay? Similar type of dynamic, but here we're getting breakouts or breakdowns. But what's different? You'd come from a downtrend and you broke the key level of support. So you had no support underneath. You were hitting new lows on a multi-year basis. And look at how it just kept falling and falling, and it fell fast and it fell hard and so forth, right? That's where breakouts are fantastic. When you don't have all those, that overhead supply or that underneath support, those the demand that naturally comes from bad positions and people that are offsides on their trades. So good stuff. So here we go. In conclusion, so we have the currency recap that will come out tomorrow night. We'll get out our FX recording, and then next week we have the Thanksgiving break. So normally we don't do a ton of classes. There's not really much scheduled typically in the way of major announcements and whatnot around major holidays like that. So next week is going to be kind of like Christmas break. It's a big break here in the US, not a lot of economic reports. There will be some internationally if you're trading in, Europe or Japan or what have you, and those currencies, there will still be some economic reports, but it will be a quieter week. Hope you enjoyed the midweek. Have a great rest of your day, and we will see you next time. Goodbye, everyone.